Welcome to Real Talk. I'm your host, Chris Rogers, and today we have Kelley Jeong, who is a financial advisor, and I'm going to jump right into it because I cannot wait to hear what she has to say. How are you doing, Kelley?
Good. How are you today?
I am good. So, Kelley, tell us a little bit about yourself and how you got into this financial advisory career.
The reason why I started this industry is more like to survive capitalism. That's in general reason. And the other reason maybe I can talk a little bit about later, like in our topic today.
Yes. Is there like a personal reason though why you got into it? Were there things around you that you
I
noticed?
was the same as other people. Like people from like all of the country to Vancouver, they paying their rents, they paying their grocery, they paying everything here, but everything goes up. But your job, your income is the
wages
same.
stay.
Wages
That's
stay the
that's
same.
the universal cry.
Yes.
Wages stay the same.
So I was wondering what happened to my income. I was working so hard, 12 hours per day, and Monday to Sunday. I was really hard worker. But then my life was the same. So I realized that what if I know about information in finance, what it will be happening in my life. And I decided to learn something. That was finance, and then try to become a financial advisor to help people to get
help
into,
others,
yes,
not just yourself.
Yes, not
Okay.
only myself, to help people to achieve their dreams and goals.
Yeah. Generally, people are afraid to confront or to open their eyes or to even learn about finance in general. I was one of those people. And what would be one of the first principles you think someone should apply if they want to build wealth?
So most people, when it comes to money, they believe that, oh, money, finance, investing may force me down, may, leading me failure or something, maybe losing everything if I do investing today.
So fair, just fair.
Yeah, that's what when it comes to money, they thought right away, financial advisor, investment advisor, they think that, oh, if I meet this person, maybe then they're going to just taking my money. That's what most people think. But the actual reality is, when it comes to money, we see main thing is how much money your asset is protected, or how much money, like let's say you have mortgages or house.
Yes.
Any asset that you have, how much debt you got, we analyze everything, how much like your asset and debt, and then what's left now.
So a financial advisor is necessary because if
For
you go down
everyone.
for everyone and
Yes.
not for everyone?
It can be for everyone. Yes, because reason why is if you're buying a house, you cannot buy a house by yourself. You need somebody to sign a paper,
A broker.
right?
So you need
Yes.
professionals along the way.
Yes, in Canada,
to
when
help
you're
you
buying
out.
an insurance product, you need somebody like called financial advisor or insurance agent or
Yes.
broker. You need
Yes.
somebody to help.
Someone who knows the
Yes.
ins and outs, so you're
Yes.
not just making the mistakes.
Yes.
Okay.
Same thing goes investment.
How do you find a broker?
So there's two type of financial advisor in Canada. Number one, you can find people from bank itself. If it's a TD Bank, TD Bank. If it's Scotia Bank, just go to Scotia Bank.
Yes.
Or you find somebody who work independent. Independent financial broker.
Are independents better than the bank? Because I think the people in the bank they're working on. They're both working
Everybody's
commission.
working hard.
Everyone's
Everybody's
working
working hard. But main different thing is, people who working under the bank,
Yes.
they're just working that bank, so specific those banks, so they can only allowed to sell those products.
Through
only.
those
Yes,
products that
only
they
those
cover.
products.
Yes.
They're not allowed to work with other bank or selling other insurance company products.
Yes.
But independent financial advisor, there's so many of them like me.
Yes.
But they're able to sell so many financial institutions.
There are more options
Yes, more
available
options
with an
available.
independent as opposed to
Yes.
someone who belongs to an institution
Yes.
like a bank. Because
And also think about it. If you are working in bank, you won't have a time to educate people to financial information because they're working by hour, by wages, right?
yes.
But
yes.
if you're working alone as a broker, you got a lot of time to build your business, and you can educate people. Or some old broker doesn't have the system, doesn't teach anything.
So would you say it would be more advantageous for someone like myself if I want to get an advisor, get the expert guidance? It's better to go with someone who's independent because of the options. I mean, that's where you are, right? I
But
mean,
not 100% yes, because some of people I know in bank, they're really expertised in their industry.
Yes.
If you know somebody like that, that's great. Same thing goes independent. What if somebody just got a license
Yes.
and they are saying, oh, I'm
Okay.
an independent broker?
Yeah.
Doesn't mean that that person is expertised.
That's true. That's
So
true. That's
it
true.
really, I think it's when you're buying a house, you take time to find a great broker, right?
Yes.
Same thing goes finance. Like if you want to have a good insurance or a good investment, you have to effort into find somebody like that in industry.
Absolutely. So, what are the common pitfalls, like when people get into learning or becoming financially literate? What are some of the pitfalls, especially someone like myself? I personally, I did not get a broker. I did my own due diligence, and I started investing about 2 years ago, and I'm still doing it on my own. I think at some point I would definitely need, expert guidance, but I wanted to do it because I have to admit I had a healthy distrust of brokers. I just felt like those people are just doing it for commission or whatever, and they're really not. I think they're good brokers. I've never had a broker, so I can't say I had a bad experience.
Because it's hard to get an experience, or it's hard to find somebody like that. Even myself as well, when I become financial advisor, I was meeting somebody who's offered this system and products and everything, but I got scammed.
Whoa.
Yes.
So okay, so let's go back to the pitfall. What are
Yes.
some of the pitfalls
Yes.
some people find themselves falling into? You can even give an example of your situation. Like what are you okay talking about what happened to you?
Yeah, so I was invited some of seminar that offer multiple investment strategy, and I was there and I was attending those all seminar, and I met somebody there who offer investments and insurance. But then she said me and my husband should buy some specific products, so that way I can grow my wealth and my life gonna be great. We were so young, we were so naive, we didn't know anything. So we signed up some paper and we realized that we're gonna lose money over time. We didn't know about it. And then I realized that the information, like financial information, is very important before you signing anything. So that's why I think it's very important to meet good financial advisor. Otherwise,
Was that done on purpose in her part? Like,
I'm sure that she knows everything, what's going on, because she's a licensed person. She know what is going on, what is this product's benefit, or
did she benefit from it? See, that again, going back to my,
obviously she
benefited
yes.
because you had to pay?
Because I purchased some products, but then that was not suitable for me and my husband.
Yes.
And we were so young, and we
Yes.
didn't know about it, and then we just signed it. But I realized that that's good for her, not good for us.
Not good for you.
Yes, they made a good money from us.
Wow. That's actually, I think that's the reason why I went into my, I'm going to do it myself, because I feel like I work hard for my money and I wanted to learn it because I was always afraid. And coming from a background not of wealth, I always felt, had this sort of mentality where it's, I think I call it a scarcity mentality.
Totally.
Where, you're afraid. You're like, I
Totally.
don't have money. I don't know. This seems like, how should I say? It seems daunting. It seems like, oh, you have to go to school for a number of years to get a degree in finance to understand this stuff. And it's just, it's fear. It's just pure raw fear. And once I got into understanding what I wanted to do, and I also have to mention, within 5 years, my income kind of doubled, but I still didn't feel like I was getting ahead. I was getting frustrated. I was like, well, how come I don't feel like I'm like literally doubled my income in 5 years, and I felt like I wasn't getting anywhere. And I'm like, I have to learn this. So when it comes to long-term wealth building, what are some of the strategies you would advise someone, again, like myself, coming in?
So I will say there's two type of way that you can build your wealth in long term. First thing, let's say, I'm just giving you a scenario that
Yes.
let's say you are having a lot of cash with you right now. Today, 2023.
Yes.
You're looking for investing somewhere. And then you're looking for, let's say, long term, in your knowledge, let's say 30 years. Anywhere is great because 30 years is really quite a long time. And you can invest in any place, like, to be honest, because it will be the lowest price today. But not many people have that situation. Most of people has a little bit of money and a little bit of cash flow every month, right?
Yes.
So most poor people, they should start investing weekly. So that way, instead of monthly. Because people think, oh yeah, let's do periodically, like investing. they thought, oh, maybe monthly investing. But the monthly investing doesn't apply to your money to growing faster in the way that investing strategy, like
Yes.
the investments,
So what you're saying is more frequent.
is more
It
frequent.
doesn't have to be higher volume. It's
Yes.
like frequent, just more frequent. Because
Yes.
it grows faster as
Yes,
opposed
but
to
if you
monthly.
do weekly, it's more faster.
Yes.
Reason why is the market is always fluctuating, like ups and down, like roller coaster. Then when it comes down, it's great, but do you expect that your money gonna be purchased by a lower price? No, nobody expect that. Like nobody expect that what's gonna happen tomorrow, what's gonna happen in the future. So we buying a little bit of dip when it comes down market, so that way you can grow your money faster. So for long-term investors, it depends what is mean by long-term in your knowledge. Some clients comes to me say, oh yeah, I'm looking for buying a car for long-term period. I'm looking for investing for long-term. But I thought long-term in finance, we believe that long-term means more than 10 years. But he thought long-term means like 5 years. So,
Okay, I'd like to have a conversation
So-
with this guy.
so
Long
this
term.
is a very important to know what is it define long-term in your knowledge. So that way financial advisor know what you're saying and then we can go from there. That's very important.
Long term for me is 15, 20 years.
Yes. Then
Again, people have different rates.
Yeah,
30 years, I don't
everybody's
want to.
different.
I don't want to invest with 30
I met
years.
one of young guy. He was 23 years old, and he said he was so exciting to wedding and having a car and having a house, and that's great. Let's do it. That's the financial strategy. Let's plan something. And then I realized that for his knowledge, his term, long term defined like 3 year. And then I talked to him. It's not enough time to growing your money faster. It makes sense. Like imagine like if somebody saying to you that I will grow your money like 300% in 3 years, then everybody will invest in that person.
Is that a real person? Can you give me that number? 300? No.
Exactly. It's not even make sense.
It doesn't make sense. Yeah.
Yes.
So you have to be aware of
Yeah,
some
aware
of those.
of those
So if
things,
someone,
yes.
if a broker promises, like, what's the average return in certain in typical investments? Would you say, like, when you throw out the word 300, I'm like, yeah, sign me up. What's the average return on like, say, investing in the stock market or investing in any other investment like opportunities? What's the average?
It's hard to say.
It's hard to say because it differs. Okay.
Yes, everything
All
is
right.
different. And
All
then
right. That's
if I'm
fair.
saying like, let's say if I'm saying to you today, oh yeah, our brokerage system offer like 30% average return. Now everybody comes to me,
Oh,
but
of course.
they're gonna expect, oh, I'm gonna get 30% today, and maybe soon with her.
Yes.
But it's not true because today of the market price, it will be different where other investor investing at that time.
Gotcha.
So it will be
gotcha,
totally
gotcha,
different
gotcha.
return. Maybe it's saying that in internet saying that average return like 30%, 40%, but maybe it was good strategy comes with at the situation at the moment, and then that stock market it everything matched each other at that time.
Yes.
Maybe that's why he got 30%.
Okay.
Right.
Okay. So, in an investment portfolio, how important is diversification? That's a word that's thrown around a lot. How important is diversification within the
It's
portfolio?
very important. That's a very good question. It's very important because let's say if you don't understand what is Tom's mean by value-oriented market or growth-oriented market, if you don't understand what is the mean
The
between,
difference, yeah.
then you probably investing somewhere one specific investments,
Yes.
but then it can screw over time.
Okay.
Because we don't expect anything like war or financial crisis. We don't know about what's going to happen between U.S. and China. We don't know anything, right? As a normal people.
The
yes.
term not keeping your eggs in one basket is that you can describe it by diversification. You don't want to put everything in one area because if that area is affected, then you can get screwed up. By diversifying, and I'm saying this just
Yes,
in layman terms.
that's right.
Diversifying, you lessen your risks. How much would it take to start investing? Because in my head, way back, I would think, oh, you need a lot of money.
Many others ask the same question.
Yeah, what's the lowest
The
amount?
lowest amount is $1.
In my head, I thought you need 20, 30, that you can't start with 1,000, you can't start with 500, you know?
Maybe because, marketing from the big company, like, when it comes to banks, there's a walking in bank and there's a private bank. And then when it comes to wealth management or private bank, people believe that, oh, if you don't have so much money, they don't take that as a client. So,
But
that's maybe that's one.
I think some financial experts kind of get. I think they give off that vibe where they want to deal with big ticket or big investors, and I think that kind of fed into the whole fear. Because to me, I never heard someone actually say, you know what, you can start investing with as little as so and so. And I think people, the financial experts, don't want to deal with people who have a little bit of money because I guess.
But actually, it's not true because if you're walking into the bank, everybody do that same like amount of money. They're starting $20 per weekly. Some people starting like $100 per weekly. Everybody does. Obviously, each investment has a minimum amount of investing.
Yes.
Let's say mutual funds.
Yes.
Minimum investing is $25 per weekly.
Wow.
And monthly, if you want to do monthly like investing, it's $500 minimum. And but if you when it comes to stock market, it depends on company price and share, right? So it depends on what's price per day. Let's say the today price is like 0.05 cent, and you're buying some dip today, you can starting $1. That's how it works. Yes.
I see. What's your perspective in risk management when it comes to wealth building?
So when it comes to risk, there's 5 steps of risk. Number one is low risk, and then low to medium risk, and medium to high risk, and high risk. When it comes to risk, you gotta think about it. What's your knowledge level of understanding of investment? So let's say you're poor understanding of investment, and when it comes to risk, you won't starting even investing because you don't understand what you're investing for. And when it comes to like let's say your great investment knowledge you have, and you have a certain time of period, then maybe you can starting like medium risk. So it really depends what knowledge level you at and how much time you got.
When you say level of knowledge from the clients.
No, level of like understanding of investments.
Okay.
From each individuals.
From each individual.
Yeah.
Got
So
it.
if you are having like hard time or struggle with understanding, you should not even starting investing because every investing has a risk 100%. So even lower risk means you can lose everything. You can earn something, but you can still lose everything. Higher risk means higher fluctuation. It means if you're jumping into it, but you don't understand, but you got a lot of time, you don't know what's going to happen.
Talk a little bit about or explain a little bit about the significance of budgeting and saving, because those are two areas that I think we all have to deal with, but a lot of people don't understand it fully or don't really realize how they work hand in hand.
When it comes to budgeting and saving, I think you got to write it down, how much monthly rent, how much monthly grocery and expenses.
So your total expenses.
Yes, total expense is very important, and how much you make money per month, like income after tax. So then after that, if your income minus your expense, that become your cash flow, right?
Okay.
So when you see like writing down after a couple of months, you're gonna find that average your cash flow, how much you can saving up to how much. So that way, with that money, you can decide it to protect your asset and then starting investing, that sort of it.
So that's something that you actually help your clients with. You tell them to write. You actually tell them to write it down.
Yes, but that's basic financial analyzing between clients and me. But personally, if you're thinking to purchase a house, you gotta starting budgeting and plan ahead before you do any kind of plan. Like even though financial advisor can help build your financial plans and the strategy, but personally, you have to write it down, like how much you got and how much you spend. And let's say you're purchasing car next month, and how much loan you're gonna taking it, and how much interest rate for that. And then you gotta plan ahead, like before purchase something. That habit is very important. Because one of clients, I was just giving you an example.
Yes.
One of clients was going to buying a house by next month, and I was asking him, okay, how much the rate of mortgages? He says 3%. And how much mortgage are you getting? Around 450,000. So he will buy around 600,000 property, but he will down 150,000, and then 450,000 will be that. And do you have any protection for that? He said no. And do you have any other company protection from like disability insurance from your company? He said no. And what are you gonna do if you are going to pay mortgages, let's say $3,000 per monthly, including your expensive, maybe more than that. And if you are injured from your work or somewhere, who will pay your expensive next month? Do you have enough like emergency account? Do you have any enough savings account? And then he were thinking like, well, I'm not sure, right? Then he's not even ready for buying a house actually. So before purchase anything or before creating any kind of debt, you gotta think about it. What will happen? There's so many scenarios can be happen.
But what you're saying here is
Yes.
before you make any sort of major investment, first learn how to protect.
No, I'm not talking about investment. We're talking about budgeting right now. So
Okay.
if you are thinking like, let's say you came to financial advisor or you're just thinking to buying a house or buying a boat or buying something, but you're gonna leveraging, right? You're gonna have some loan, you're gonna have some cash flow, and you're gonna put some down payment for that, right?
Yes.
But then after that, what will happen? Because many people think that, yeah, I will only have a mortgages, that's it. But it's not true, because when you own something, you get more responsibility.
Yes.
That what if like entire building has a problem? Then now you gotta pay for strata fee more higher than before. And then many people think that, oh yeah, strata fee right now they're saying that $280, and then they never think that it will going up. And not only that, let's say in your family, you never think that you're gonna marry, but you marry all of a sudden and you make baby now. Now you're saved the money, your
Extra
investments.
responsibility.
Yes,
extra
yes. Now
responsibility.
then you're gonna break your account. You're gonna change your financial plan totally different way.
Yes.
Right? That those
So the
things
plan
are
you had
planned.
pre-baby
Yes.
is not going to be the plan.
I mean, there's not a COVID baby, but
Yeah,
you know,
yeah.
I mean, I'm saying that always plan ahead what will happen, and we gotta plan it before we do any kind of investments. To be honest.
Gotcha.
Yes.
So when it comes to budgeting, you write it down, be clear of what it is, and like you said, do it for a while to see the average where you at, so that way you get a better understanding. I'm sorry for misunderstanding what you're saying earlier, but I want to actually, because my brain was going there for some reason, I want to kind of slightly go back to that, and then we'll continue.
Okay.
Is it wise to think of protection though? Because you mentioned insurance, just in case like something happens. Yeah, if you were to purchase you're going to purchase a house, or you want to do something, and let's say you fall sick or you get injured, you also, the protection side of it is something to think about too.
That's very important. Reason why we're saying protection is asset, protecting your asset is, imagine you're working hard, you're making $8,000 per monthly income, but you're the only person who take care of your family and nobody make income. Then what happens if you injured? Can you still work?
Oh,
Maybe you can still work. Like maybe you can work only one day, maybe
yeah.
4 days.
Well, your
you
income
gotta
will
go
drop.
To,
Yeah, something
your
changes.
income gonna drop,
Yes.
right? But let's think about EI. Like let's say if
let's
you get,
not think about no. I'm sorry.
let's say
Yeah.
you get laid off today.
Yes.
Yeah, of course you can register EI. But what about like if you get injured and let's say you're able to go to work 3 days, but you're not able to work 2 days, then your income gonna drop, and the EI is not gonna pay for everything for your income, right? So that's another thing that you need minimum. Let's say even though you're making $8,000 per month, but you need a $6,000 minimum for your family.
Yes.
But then the company only paying you because you're only working 3 days.
Yes.
Then it's not gonna enough for you, and then now you're gonna break in your savings account, and you're gonna break until you get recover. You're gonna break everything. Then now your financial plan, everything's screwed up.
Scattered.
So that's why protection is very important. And also, of course, protection has 4 type of protection, like life insurance, disability insurance, and critical illness, or that. But main thing is life insurance. Reason why I was mentioning when you're having mortgages, why you need a insurance is, let's say you got let's say the guy I was mentioning, 400,000 debt, but you don't have any family that somebody gonna help you if something happened to you, and all of a sudden you died. Then you still have a 400,000
You're
debt.
leaving that debt with your family as well,
Yes,
right? That's a burden on them.
Yes, like your debt doesn't disappear even you die. That somebody have to pay the bill. So what if you don't have any protection? Who will pay your debt?
So
It's
that's
your
where
family.
insurance comes
Yes,
in.
yes.
So
And also, we're living in capitalism. So even you don't own anything, but when you die, Even dying is not free, unfortunately. Like you gotta pay for.
Unfortunately.
Yes, unfortunately, you still have to pay for the bill for funeral home, and you still gotta prepare your, like you're gonna be burned or you're gonna be graved, and then what's gonna be, and then that's also costing average like
it
10,000.
Dying. It's you
Yes,
come in.
it's sad, but it's like sad and can be funny, but it's like sad. Yeah.
It is sad. It is sad. So when a typical client, you have a client comes in and they're like, "Hey, I have a few dollars, and I feel like I'm ready to start investing," but they don't know what they want. And I'm sure you have clients like that who really they know they want to do something, but they have no idea. They don't know where to start. What do you normally? I mean, during your consultation, do you like
Usually,
ask them, like, tell me? Again, they have no idea. I'm just saying, I'm coming blank, a blank paper. I have a little money.
To be honest, 80%, 90% of everybody's like
that high?
Yes,
wow.
Most of people like that.
Okay.
Because I was like that too. But best thing is I usually teach them how does basic finance 101, how does it works, how money works, like how tax works, how accounts works, what kind of investments available in Canada, and then but then after that they learn something, and then they realize that what they can do. Now they see the opportunity, what can do, but then after that, sometimes some clients is like not enough cash flow. Sometimes some clients thought that they can do something, they can buy a house, but actually it's not. But actually it's good for them because they see the reality, what's gonna happen, what will happen. But I'm just being honest to my clients. Sometimes I reject clients because one of clients said, I will create the debts. I have a student loan, I have a mortgages, I have a car loan, and so many debts. She asked me, I will make one more debt. Can you help to, fix my debt consolidation? But it won't help anyone like that. It won't goes to.
So she's digging a deeper hole, so you have to protect your clients from themselves sometimes.
Yes.
Because she's saying, I want to create more debt. Now let me ask you this: do you have clients like her, like whoever she is? Do you have clients who you have to sometimes be like, you know what, this purchase or whatever you're planning on making is not going to put you in a good place. It's going to actually put you deeper. Do you get pushback on that, or do they listen to you and be like, you know what, that boat, I don't think I need that boat or that vacation? Like, do you find yourself like?
I try to be nice to them to say the reality, but most people feel bad. Oh, I don't like you.
Okay, so you're not indulging them. They want to be indulged, right?
They don't really like my advice.
But if you indulge and then they get deeper in hole, then they're still not going to like you anyway, because they're going to be like, it's your fault. So
because they already have answer in their head.
Yes.
They're not looking for answer that no. They're looking for the answer anyway. Yes.
What strategy would you teach your clients, like, to minimize risk in the stock market?
If you're investing, let's say stock market, if you don't understand what company earning and then what company like debt or asset or like their financial statements, obviously you don't know what you're doing. Then
so before you invest, you want to understand what you're investing in,
where are you investing,
what's their earnings,
yes,
what's their debt. So all of those information again.
And what was the growth of company over time? Some company just establish their company and then they're looking for investor. But you don't know this company's how relation between other company, and then how does it works between that company gonna be, how it's gonna be. You don't know because they just made a company.
Yes.
Right.
So you don't know the trajectory. It could be on the decline already, even before it hit its stride.
Yes. And also even big corporation, like you don't know what will happen in the world. Let's say you invest in oil company, some oil company, but then you don't know what will happen. Let's say politics said like, oh, we won't even using oil for a decade.
Yes.
What's going to happen?
So what I'm hearing is do your homework. Do your homework before you get in there. Don't just jump in.
Yes.
Like a friend called you with a hot tip, right? And be like, hey, I heard. Don't jump into that.
I saw them back in 2019 before COVID. People say, let's buy a marijuana company.
Yeah.
Because that was the CBD oil was really hot at the time.
Of course.
And then people saying that let's investing. But what happened now? It's dropped.
It dropped.
Yeah.
So the people who put in that money most likely lost their shirt.
Yeah, all the time.
There is a new account in town called FHSA. Can you tell us a little bit more about that?
That's right. That's actually really hottest topic this year. FHSA is the first home savings account that was like announced this year April. So from CRA, right? So across Canada, like everybody who has their money that to build buying a house, like they can apply it. So this account is a combination of two different accounts, like TFSA and RSP. If you heard about it, like I'm sure many people heard about it. So TFSA is basically tax-free savings account. So your money grows is tax-free, and when you withdraw your money, it's tax-free for your any kind of investments inside. And RSP also, like usually we think that it helps tax deduction, and when you put some money in it, you get tax refund every year, right? And also plus if you do any investments over time, your gross is not a tax-free, but it tax deferred over time. But then people used to using RSP to purchase their house by following program like First Home Savings Program from RSP. But the problem of First Home Savings program in RSP, once you withdraw it, you have to pay back in your account. I mean, it's not bad. You pay back your account, you build your own wealth for retirement. You're
paying yourself back.
Yes.
Okay.
But the thing is, it can be tough for people who have a lot of mortgages. Let's say your payment of mortgage monthly is like $2,700, but then now you have to pay back to your RSP minimum some sort of a money. Then your monthly expense can adding up, right? Then it can be kind of burden for you. So the new FHSA is good for people who want to benefit of TFSA, which is tax-free growth and tax-free withdrawal. At the same time, people who want to have a tax deduction from their income, plus who wants like tax refunds, that would be the best choice for the these accounts, like first people who want to open their account and buying a house. But the one thing is you gotta remember that is you must buy a house.
You must buy a house.
And
so
you have to be first home buyer in not only in Canada, in the world, across Canada.
You cannot own another home,
yes.
period, at
yes.
all. So
yes.
it only benefits first-time home buyers.
Yes, in your life, yes.
Wow.
So let's say you bought a home in Brazil. You're not eligible for first home buyer. So you're a second home buyer.
But
now.
can the government? Well, I guess they
will figure out. Yes,
they'll be able to figure it out.
yes.
They're like, yeah, this is my first home. Yeah. Okay, interesting. So my other question, which to me I think is a often misunderstood area when it comes to inflation and interest rates. Those are two areas again. They're intertwined, but they're separate and distinct.
Yes, that's so true.
Can you just kind of help us out here a little bit by explaining?
So let's talking about inflation first. Like inflation, let's say about grocery. Like a long time ago, banana was like 10 cents for each banana, but now you gotta pay 70 cents. So, but at the same time, think about your wage. Your wage was, like, let's say your wage was 80,000, but now you're making 160,000. So wage up, groceries up. What's not going up? Your money. Your money is not going up
at all.
Reason why is like imagine you're living where inflation rate is like 8%, which is Vancouver or Toronto, and you're 30 years old. It means you're losing money every year 8%. Because your wage is going up, your groceries is going up, your money is going down, right? Then 8% times 30 years, how many percent?
Wow.
Like 240%, you're losing it. So
you're losing that.
If you haven't earned anything from bank, it means your money does nothing. Your value of money goes down. That's why people are looking to have a better interest rate for their accounts. But then problem is, like in capitalism, like if you don't find the investment strategy or some sort of like products that doesn't fit on your accounts, then your life is like you're still working hard. You're really working hard, but you cannot retire.
Wow.
So that's how inflation works, right?
It's the old loop.
Yeah.
It just puts you in the old loop. Okay.
Yeah, but then interest rate is different. Like interest rate can be ups and down. Like it depends on like the situation where governments place it and where other countries doing it. Let's say other countries started war, then it can impact interest rate. Interest rate can be affected from many different places. Like it can be war, it can be like COVID. You
Yes.
know, things that we're not expecting.
A pandemic,
Yeah,
it can be a
pandemic,
shortage in
anything.
certain
Yeah.
goods or resources. It could be anything.
Yeah,
Again,
who-
it's
who
beyond
knows,
our
maybe
it's beyond my
something-
control and your control.
Yes, it's maybe something going to happen by next year again. Then it's going to affect our interest rate. So when interest rate goes up by governments, then people who had a lot of responsibility, like who owns condo or who owns apartment or a house or anything that has loan, that variable rates, then you got to pay off more and more and more, right? Then your rental price goes up. Then people who doesn't own anything, they can feel it's getting more expensive. Now they're not going to spend their money from their pocket. So now then all the economy comes down, then the stock market goes down together.
So higher interest rate, inflation coupled together basically affects everyone, the rich and the poor.
Yes.
No one's untouched.
Yes.
Okay, but I think like earlier in my life, I didn't understand inflation. I'm like, what is inflation? It's invisible. It's this it seems to me up until recently, like it's just an invisible thing. I hear inflation, the word thrown around a lot, and for some reason I didn't understand. And then interest rate, I understand that a little bit, but then once you understand them, how they're, again, when they're linked together and how they work and how they affect people, and you see, like I go to the grocery store now, and I'm paying.
Now you're checking price tag.
Yes, of course, because you feel it. I mean, of course, we all felt it during the pandemic, right? We all felt it. But guess what? Now I go to the grocery store. The other day I went there, and it's 2 bags of groceries, like $150. And I remember getting sort of the same thing, because I usually buy the same thing, right?
Yeah,
I don't
well, you feel the
change
same
it.
because your wage is growing up, but at the same time, inflation went up together.
Oh my God, man!
But what if you had an interest rate, let's say average 10%, beating inflation in your accounts? Then you won't feel like you're losing.
You wouldn't
something
feel it, yeah.
because your monies keep growing up.
Yes.
And you feel like, okay, it's okay, I can spend this money. But what if you don't have any interest rate in your accounts? Then you feel like you keep losing your money. You're working hard, 12 hours per day, but you feel like you're losing something.
Absolutely, absolutely. Okay, so what I wanted to say to you, interestingly, what is the last piece of advice you can give to the viewers when it comes to wealth building? What would you say to them? What is it that you think that they need to understand on a basic level?
So I want to summarize our topic today.
Yes.
So first thing, you gotta make sure your asset is protected. So if you're willing to buying some houses, how much you're gonna buying it and how much debt you're gonna create, make sure your asset is protected, number one. Number two, now you're gonna manage your debt. Even though you don't have a debt, you will have a debt in the future, especially when you're young, you don't have money for school or buying a house, buying a car, anything like that, or even having a kids. It's not cheap, right? So those kind, make sure you prepare how much debt you will have and then prepare time ahead. And number three is emergency funds, how much cash you got. So usually emergency funds means your monthly expense times 3 to 6 months. So in case you get laid off or something happened like COVID, make
Yes.
sure you have enough cash to protect yourself. And number four is investment. So actually it comes to last thing, because what if your money is not protected? What if you don't have like enough cash in your accounts? Then you're gonna break your accounts, so you're gonna break your investments, then you're gonna go back to where you were at the beginning, right? So you don't wanna do it. So number one, protection. Number two, debt management. Number three is like emergency funds, enough emergency funds. And number four is investments.
I want to thank the viewers again for listening, tuning in. Kelley is going to be back. I ask each and every one of my guests, would you come back at some time, Kelley, and
course.
drop some more knowledge on us?
Absolutely. Why not?
So Kelley's going to be back. So I just want to say in the section at the bottom, which is the comment section, leave a question, subscribe, like, share. Kelley's information or contact information is also down in the comment section, so you can contact her through that. She have social media links also. You can contact her through social media links. Kelley, thank you so much. It was amazing. Thank you. I learned quite a bit today.
Thank you for hosting me as well.
Definitely, and please come back again.
For sure, 100%.
Thank you very much. Bye.
Thank you.
All right.
Bye.